Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday the 17th of June 2021. And we're looking at what is happening to the news. Gold and silver prices first thing this Thursday morning. We're also looking at the FED FOMC announcement yesterday and the downward effect it has had on gold and silver. So let's take a look. Well, good morning. It's overcast here in sunny United Kingdom, or not so sunny United Kingdom. Okay, main news of the day, main financial news of the day was the Fed's FOMC announcement yesterday and Jerome Powell, the Fed chair's comments to the press and media thereafter. Now, we have highlighted in videos emanating back to Saturday for our weekly update, and then every day this week, that yesterday was going to be a crucial day for gold and silver prices, and we'll see in a moment that it has been. But not necessarily for the better for those holding it, but perhaps a great opportunity for those thinking of purchasing. Now, let's have a look at these headlines in Bloomberg. Fed sees 2 rate hikes by the end of 2023, inches towards taper. And we'll have a look at that in a little more depth because this is really the key news story as far as we're concerned. US futures, European stocks drop, dollar climbs. Biden-Putin paper over splits as both claim summit wins. Of course, that's politics. Payment app Wise plans direct listing in tech win for London. Now, we attended a fintech bankers meeting, Zoom meeting yesterday, where bankers from around the world were talking about not so much specifically cryptocurrencies, but digital banking per se. And I have to say to you, in spite of my age, I'm watching this and shaking my head, realizing how in the age of blockchain and smart contracts, these bankers are still working with old technology because they claim, well, it works. And the only excuse they have for not perhaps being far more progressive is that the talent pool available is difficult and expensive to find. And that, I have to admit, truly surprised me, bearing in mind the wealth of banks. That's an aside. The commodities boom is luring criminals to make bigger and bolder scores. Okay? 2 things you should always pack on every international trip. Christian Eriksen to receive implanted heart defibrillator. And US-UK reach Boeing Airbus truce following EU agreement. Now, as we've mentioned, the key thing here is the Fed. Let's have just a quick look. I'm not going to read through all of it. Federal Reserve officials sped up their expected pace of policy tightening amid optimism about the labour market and heightened concerns for inflation. Jerome Powell told the press conference yesterday officials would begin a discussion about scaling back bond purchases. Now, that's what we did predict. They wouldn't make the announcement there would be a scaling back, but they would discuss it. However, the little bit that we even were a little surprised at, we were expecting Jerome Powell to be moderately hawkish, but then he said they also released forecasts that show that they anticipate 2 interest rate increases by the end of 2023, sooner than many thought. And they upgraded estimates for inflation for the next 3 years. Now, we have listened to a few other commentaries about the announcement yesterday, and the way the language was phrased suggested that there was even the possibility that rates could rise, albeit only 0.25%, up to 0.5%, by the end of 2022. So, the central bank held the target range for its benchmark policy rate at 0 to 0.25%, and maintained the 120 billion pace of its monthly bond purchases, which we discussed in yesterday's video. The more aggressive signal from the Fed's forecast saw the dollar rise, and we'll have a look at that in a second, stocks decline, and yields on 10-year treasuries jump. We are looking at a Fed that seems positively surprised by the speed of vaccinations and the ongoing withdrawal of social distancing measures. The quarterly projections showed 13 of 18 officials favoured at least one rate increase by the end of 2023 versus 7 in March. 11 officials saw at least 2 hikes by the end of that year. In addition, this is where we got the info from, 7 of them saw a move as early as 2022, up from 4. The dot should be taken with a grain of salt, Powell said, referring to the interest rate forecasts. We have already seen the situation previously when the Fed were threatening to cut back taper, threatening to raise rates. The likes of Peter Schiff came on board and said, no, it's not going to happen. They're lying to you. It'll never happen. They cannot raise rates. The economy will implode. The financial system will collapse. It's the end of the world. Well, they did do just that. Perhaps not as quickly as many thought they might, but they did do it. And rest assured, there is still, even now, with a $7 trillion debt on the Fed balance sheet, which will probably be $9 trillion by the end of 2022, there will still, and a bludgeoning national debt, there will still be room for small incremental interest rate rises. They have to do it to keep the system running. And don't ever be fooled that that won't happen. FOMC median projection for unemployment in the fourth quarter of 2021 was unchanged at 4.5%, and the median estimate for the same quarter a year later was marked down to 3.8% from 3.9%. The 2023 forecast was held at 3.5%. The FOMC raised its projections for economic growth. Gross domestic product was seen expanding 7% this year, up from a prior projection of 6.5%. It maintained the 2022 expansion forecast of 3.3% and raised the 2023 estimate to 2.4% from March's 2.2%. What we mustn't forget is the reason the Fed was hawkish is simply because inflation, as measured by them, at the moment is running on an annual basis of 5%. They told the public this is a transitory, their words, a transitory situation. That figure will fall back, and it will, but perhaps not by as much as they were hoping it will do so. And this, when we look at inflation in the UK, announced the other day, above the 2% level and likely to go higher, they have to get a grip on this. Yes, they will allow it to run above 2% for a certain period of time. What they cannot afford to do is to allow it to run away from them entirely. Looking at BBC, in the UK, COVID epidemic growing across England, says study. That's not good news, and not good news for the economy if the result of further lockdowns. We've already had the release from the total lockdown delayed another month. Main headlines generally, to be frank with you, nothing of great import as we can see here. And going over to the United States, Biden and Putin praised talks, but discord remains. And you could see by the body language of the two, if you watch the news, they both seemed moderately uncomfortable with each other, or at least wanted to give the impression that they are not the best of friends. Yes, the holiday we mentioned yesterday actually passed in Congress, so they voted an extra day's holiday. Decoding Biden and Putin's body language. Cruising industry still in choppy waters. I just love those headlines. Fed warns the path of economy depends on COVID. Of course, if the new variant that we've witnessed here in the UK and in certain parts of Europe catches hold, we could be in dire trouble yet again. And Putin wanted meeting with Biden. Again, it's all Russia and America's presidential meet that seems to have captivated the headlines. Okay, let's go to some of the important data. Equity markets yesterday did not like what the Fed said, and we could see the Dow's closed down 265 points, the S&P 22, the Nasdaq 33. But all of them within 1%. Today in Europe, Middle East, Africa, particularly Europe and the FTSE, again down, all between 1/4 and 0.5%. So that FTSE in the UK, DAX Germany, CAC France, and overnight Asia Pacific. Mixed bag, Hong Kong rising, Tokyo, Nikkei index down. But have you noticed? All within 1%. So no dramatic reaction. We might see a little bit more today, and it'll be interesting to see which direction it will go in. We think it might still go down slightly. But having said that, I think to a large degree, until we get closer to the event of rising interest rates, the markets are going to make hay while the sun shines. But this is now something of interest. Crude oil prices marginally unchanged. Look at this, the dollar index. And this is why when we look at gold and silver, we'll see the reaction. Yesterday we were talking at the dollar index hovering around the 90 level. Well, after yesterday and now today, it's 91.6790. Very strong rate, one of the strongest levels for quite a few months. And so this is the effect it had on gold yesterday. Look at this. Before the announcement, gold was, let's have a look, $1,863. And as the announcement took place and the immediate aftermath, it dropped as low as 1807. Staged a little bit of an attempted recovery, but today has fallen right back even to a lower level. And so on a 24-hour rolling basis, gold is down $56 or 3%. Silver, similar pattern. Doing quite well before, or moderately well. Then collapsing, a little bit of a recovery, and then further decline today. So again, on a 24-hour rolling basis, silver is down $1.05, and that's down 3.77%. I think, I need to go back to my notes, but I think we said on the weekend that we expect silver to trade roughly between 27 and 28.50, but we did put a low of 26.50 as an outlier, and it looks like that's going to be tested potentially today. Not good news if you're holding gold and silver, but hey ho, very good news if you're thinking of purchasing more. We'll need to see. If I were a betting man, I would say it would go a bit lower, and then it will start to recover because the markets will realize we're talking a while into the future, and what's important is now. But we shall take a look at that tomorrow, as this video is running a long time now. Cryptocurrencies, looking at Bitcoin's price, we can see even Bitcoin over 24 hours has fallen, again 3%. That's partly, again, due to the fact that some people regard Bitcoin as an alternative investment class to the dollar, or currency I should say, to the dollar. And if the dollar strengthens, to some degree that has a negative impact on the demand for Bitcoin. But frankly, we've seen swings of 3, 4, 5,000 in a day on Bitcoin. So again, not too concerned about that. That's where we're at today. We'll produce a video probably later on, more specifically focusing on gold and silver and saying where we expect it to go from here. But overall, The main headline: interest rates will go up sooner than planned, providing the COVID pandemic does not resurge. But we're still talking, and let's be perfectly blunt about this, we're still talking at least 12 to 18 months away, and possibly 2 years. And even then, any raises are likely to be small and incremental. Watch the tapering, could come in towards the end of this year. They may taper the bond buying program, especially if the economy picks up. What do you think? Do you think gold and silver prices at this level are a steal? Would you be buying now? Would you be considering selling in view of the fact that interest rates might actually move up in the not too distant future, thereby potentially putting an even greater dampening effect on gold? Or will inflation come to our rescue? Because we know generally gold does well during inflationary times. And will the Fed not be able to raise the rates to the height that they deem would be necessary to curb rampant inflation? Share your thoughts. Thank you for listening. Please kindly give us a thumbs up, subscribe to the channel, press the bell sign, and have a great day. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.